Good morning. It's July the 4th, and we're here to talk about the marketplace, which is on fire. You should be seeing my screen and hearing my audio. Hopefully that's working. Basically, the URL, the base URL for this meeting is right up here. I have it posted, but not to this URL. There's a background if you don't understand what I'm saying, because I'm going to go a lot quicker. The handouts for today's session, all 106 slides, are available by adding this to the base URL. And future meetings, you just put the date year. So looking at the heat map, you can see Santa Clara County is basically in a red hot seller's marketplace. The bulk of San Mateo County is in a red hot marketplace, and the Palo Alto area is sort of in a neutral marketplace. What is interesting is it looks to me, if I was to summarize it in a nutshell, there appears to already be a move away from the premium for great location close to work, which is why this area up here is doing well. And conversely, the South County area is having the fastest marketplace they've ever had. So now let's just get into the actual data. We're going to start off by doing an overview. This is Santa Clara County, single family homes only. And we're looking at the inventory in the offers in red and inventory in blue. And you can see anytime the demand, the red, is above the blue, we're in a real hot or in a seller's marketplace. So you can see at the end of last year, we had excess inventory, which we typically do. Demand was lower, so we were sort of in a cool marketplace. That changed over right around Thanksgiving, mostly because of the lack of inventory, and that's why we start off the year robust. You can see in the early part of the year before shelter in place, the demand was now above the inventory, and that's what caused the market to take off. Shelter in place was announced, demand dropped down, inventory was greater, the market sort of really slowed down, mostly because we couldn't show houses, and now it's reversed and we're back on going. The other thing you'll notice is even though that this says June 26th here, the dotted line is June the 4th, which is today's date. How do I have data to the right or in the future? What I've done is all the data from July 4th backwards is based on 5 weeks. So the first plateau here is based on 3 weeks, and the higher plateau or the second plateau is based on 1 week. And so what it's saying is in the last week, we're actually selling more houses, which would tend to indicate this demand will continue to go up. The inventory is flat because there's no way to predict. I look at the instantaneous inventory, so I can't reduce that to 3 weeks and 1 week. Now looking at the same concept, the most important line here is the blue line. That stays unsold inventory, the supply-demand ratio. And you can see basically shelter in place came along, it turned around and it slowed way down, got up here, and then it sped right back up again. And we're now in a market that was hotter than it was or at least I guess I may feel more comfortable saying equally as hot as it was at the beginning part of the year. The days on market down here is not significant during this period of time because the MLS froze it at 0, but now you can see we've ratcheted up and it looks like we may be hitting a plateau. You can only go to the dotted line because of course after that, that's 3 weeks and 1 week data, but going forward, this might start being an indicator, but more important, the days of unsold inventory is what the real key is. Looking at the magnitude and frequency of overbidding, frequency is what I usually discuss first because it comes alphabetically order. We're right at about 50%. So, we're not up where we were when shelter in place occurred, which was about 70%. But, if half the sellers are getting more than their asking price, that's pretty amazing. What's interesting, and this happens every time we go through a recession or a shakeup in the real estate market, is buyers are less willing to go over their asking price. Half of them still are, but they're less willing, and they're also willing to go up less in magnitude, and that's what this is. So the magnitude is simply the sale price to list price ratio average of every transaction. You can see we were much higher. I don't know what the exact number was, maybe about 108% back here, and now we're at about 100.7%. So significantly lower, and that doesn't surprise me, even with the robust marketplace, because it's hard for buyers to feel confident enough to way overbid a seller. So that puts the burden on the real estate agents to get closer to the real market value on a particular property. Here is sale price, 3 different sale prices. 10 percentile down here is the lowest 10 percentile in a given market area, and this is the county-wide. This is the median, which is the only price that most people follow. And then this is the 90 percentile. And it is interesting. You can see the 90 percentile is really ramped up here. The 3 week and the 1 week, that's probably because there's been more transactions than normal, but it doesn't take many when you're only looking at 1 week sample. So what I was referring to was basically from July 4th back to July 26th, it was ramping up. Be interesting to see where that goes in the future. Now we're going to change gears. That was sort of a broad overview, sort of looking at what's happening. Now we're going to look at what's happened recently. We're looking at what I call macro data, which is something I normally tell you everybody is garbage data. But macro data in this case is Santa Clara and San Mateo County, single family condo and townhouses all rolled together. And I'm only looking at it for 1 week. So I'm trying to figure out what the heck is going on in the most recent week. What we do is we have to have something to compare it to. And so the gold line is our comparison. And that is the same data over the last 5 years, not including the current year. So 19, 18, 17, 16, 15, which were all great years. The median of those 5 data points plotted. And that's why that data goes into the future. Current data stops with today's data point because there is no way to go into the future. So the blue line right here is the actual raw data. The red line is the ratio. So right now, this is lower. Well, days of unsold inventory, as it's lower, is better. So right now, you're sitting there, you read the raw numbers off on the left-hand side, you're somewhere around, it looks like, to me like about 35 days of unsold inventory. Historically, at this time of frame, we're normally at like 41 days of unsold inventory. So the ratio is lower. And that's why the percentage line is below 100%. Moving on to current available inventory. So this isn't what happened in the last week, even though I sort of imply it is. It's what was on the market now. And so again, you can see the gold line and the blue line are exactly on top of one another, and consequently the percentage is exactly at 100%. Now we add in the number of new listings, and now all of a sudden you go, wow, the number of new listings is above the brown line or the golden line. So the percentage is above. And what's going on? Well, normally on July 4th, real estate is an optional event where any holiday negatively impacts real estate. And the bigger the holiday, the bigger the impact. And basically what I think is going on right now is people are bored in their houses looking for something to do. And so they're going into real estate activities instead of other activities on the holiday, which is why we are having more activity right now compared to the 5-year normal. So it's just some of the things that you have to pay attention to and try to explain what's going on. Now we look at offers accepted. And again, offers accepted, as you can see on a percentage basis, is way up. And so here's the blue line versus the gold line. So we've accepted more offers in the past week than we have on the cumulative, the same week over the last 5 years. And again, I think that's because the sellers didn't go on vacation, the buyers didn't go on vacation, so we didn't see the typical drop-off in activity because of the holidays. Now we look at the number of closings. Clearly, the number of closings have been lagging behind, and that's because of the pipeline. If you assume that the typical escrow is 30 days, it takes 4 or 5 weeks for them to go through, so you had to have the sales improve, and now you're getting basically pretty close to 100%. And I think next week will probably be darn close to 100%. So that's encouraging, but that's a lagging indicator. New expired listings, you can see we're way up, and people go, well, what's going on here? I could prove this, but I don't think it's worth my time and energy and effort to do it. I believe what's happening is all the withdrawn listings earlier in this year with shelter in place, i.e. middle of March, have now reached their expiration date. And so now the MLS counts those as an expired listing, even though they've been withdrawn for the last 2.5 months. And that explains it, because when you have a rapid marketplace where everything is selling, quickly, you're not going to have expired listings. And we are, and it's because they are the old withdrawn listings. Now we're looking at the number of canceled listings. This is what I would have expected expired listings to be, below the gold line. And that's why the red line, the percentage line, is at 80% below the horizontal line at 100%. And then if you move on to withdrawn listings, you can see there are still people withdrawing listings, but at 30, that is not that many listings, and that happens all the time. You have a lot more inventory now than you did at the beginning part of the year when they were 10, most of the inventory was fresh at the beginning of the time of the year, so this 10 is artificially low. I cannot go back and get the data retroactively because once the expiration date is arrived, the MLS considers it an expired listing instead of a withdrawn listing. Now this is each one of the components looking at just the average. So what you want to do here is look at the outlier. So the first outliers is the number of expired listings. Well, it's way out of line. You know, it's somewhere approaching 200%. But again, I've explained that. I believe it's the earlier withdrawn listings. So then you drop down, and probably on the low side is the green line, and that's the number of cancellations, and that's a good thing. So then going back up on the high side is the number of new listings. New listings isn't particularly good or bad, but right up there with it is new offerings. So the buyers are coming in and buying up anything that the sellers will put on the marketplace. So basically what this tells me is we're essentially back in a new balance, and we're in a new balance that strongly favors the sellers. And so real estate should be a fairly good industry, although volume may be slightly reduced. Now we're looking, again, changing gears, we're looking at only single-family homes based on the geographical. We're back to the 5-week average. You can see most of Santa Clara County was in a red-hot marketplace. Most of San Mateo County was in a balanced marketplace, in part because I'm thinking the location premium is decreased. Move on a week, there's really no change, Now you can see there's a little change in San Mateo County, and current week is no change. So in San Mateo County, I guess the change was basically Foster City and the intensity of my balanced marketplace. So basically, there hasn't been any change in the intensity of the marketplace as far as going from a buyer's marketplace to a seller's marketplace, or from a neutral to either one in the last 4, and I call it 5 weeks because there's 5 data points. It's sandwiched, but it's basically going back 28 days. So now moving on to overbidding, and overbidding is more current data because you don't have to wait for the sale escrow to close to get the sale price. So again, we're going back 5 weeks, 5 data points, 4 weeks, a month. You can see almost all of Santa Clara counties and we're in a hot marketplace. Most of San Mateo County is. You know, the exceptions are the affordable areas in Santa Clara County, the stuff right along the borderline, and North San Mateo County. So then you move up a week, and North San Mateo County went into a seller's marketplace, but it was right on the cusp between alternating. Then one more week on the 20th of June, there's no change. The 27th, last week, there was a big change. The only area now that is in a balanced marketplace is Palo Alto. And again, I think what's hurting that is it's an expensive area. The people were paying a premium for commute to work. I think the amount that people were willing to pay has gone down, therefore negatively impacting that marketplace. And now the current week is absolutely no change from last week. And just because there's no change on this graph doesn't mean there is no change. This graph has only got 3 benchmarks. It's either a seller's marketplace, a balanced marketplace, or a buyer's marketplace, where the real market has an infinite number of variations between that. And that's what this graph is, or this table is trying to look at. So you have 4 different sections. The first section here is days of unsold inventory, and the second column is the current number of days of unsold inventory. The before shelter in place was the 5 weeks right before shelter in place was announced, ending on Friday night at midnight. So that would have been about the 13th or 14th of March, ending going back 35 days, whatever that Friday was. So before shelter in place, it was at 35 days of unsold inventory. Now it's at 29.9. That trend favors the seller. So you can look down and basically see the bulk of the areas in single family homes are currently in a seller's marketplace. The bulk of them are more in a seller's marketplace than they were before. There's an exception in the Los Altos Palo Alto that before was at 37.5 days. It's now at 48. So the white column means it's in a balanced marketplace, and that trend going from 37.5 to 48 favors the buyer. You can see condos and townhouses aren't doing nearly as well. They're basically all in a balanced marketplace, but they are a more stable product. So that doesn't really surprise me. But if you look at the trend the trend is favoring the seller for the most part. There's a couple favoring the buyer, and there's one that's basically unchanged. So that was for days of unsold inventory, which is the leading indicator. Now we're going to go back in time, essentially, because we're now going to look at overbidding. To look at overbidding, I need sale price, so delay for the length of escrow. This is the frequency of overbidding. And again, the concept is the same. Red is a red hot marketplace now, red before shelter in place. So you can see in San Mateo County, it was redder. And if you look at it, a lot of it is favoring the buyer or the same. Say, wow, the market's slowing down. No, this is a lagging indicator. So this is where the market was. This is where the market was 5 weeks ago, 30 days ago. This is an historical look and not really a current look. And then if you look at the magnitude of overbidding, it's basically the same, or again, favoring the buyer. But again, this is historical. Now, I do expect that even though days of unsold inventory index is going to be favoring the seller very extensively, I think these are going to be lagging behind because the buyers have just gotten their hands slapped, and now they're going to be conservative with their money because they're, worried what's going to happen in the future. And the last column is price. Now, I don't have any way of rating whether a price is in a seller's marketplace or in a buyer's marketplace, because every market area has its unique pricing. But the trend is favoring either the seller or the buyer, or is basically the same. And you can see the vast majority of the single family areas are favoring the seller, which means the prices are higher now than they were in the shelter in place time frame. And I'm only looking at the median, where on townhouse and condos, they're basically unchanged, which again is sort of almost what I would have expected. Now we're looking at just the sale price to list price ratio, and we're looking at it over time, and we're looking at it on the 1 week data. And this is going to be pretty fluctuating because if all of a sudden your condos sell more than single families, or just a larger percentage, condos don't tend to overbid as much, which would tend to pull down not only your frequency, but your magnitude of overbidding. When you look at this, there's a little bit of bouncing here in the frequency of overbidding, but the trend is up. If you look at the magnitude of overbidding, the trend is up with almost no bouncing whatsoever. And you're somewhere approaching 101%, maybe it's 101, maybe it's 107. I don't know what that exact number is, but the trend is up. So is the trend as far as the frequency. And again, because you need sale price, this lags behind a little bit. We're now going to look at a different set of data, and I'm going to take a second to explain it. There's 11 different metrics that I look at, and this is the order of the different metrics that we're going to look at. So you can see there's going to be 5 slides under 1, 5 slides under 2. So we're going to go through 55 slides pretty rapidly. And with each group of slides, they're going to be in this order. The first slide is going to be all 22 micro market areas. The second slide will be countywide data, which is for Santa Clara County, San Mateo County, or condo townhouses in Santa Clara County only. Then we'll look at the micro markets in single family in Santa Clara County, single family homes in San Mateo County, and then we'll look at townhouse condos in both counties. And in all cases, the purple line is when shelter in place was announced on March the 16th. That is hand put in and then manipulated automatically, so they may not be 100% accurate, but it's close. So here is days of unsold inventory. It's hard to see anything in all the different areas, so we're going to discuss it on this graph, which is the county graph. So here you have the purple line showing the shelter in place being announced. After that, days of unsold inventory went racing up. Then it came pouring back down. It's basically at the same level it was at the beginning of shelter in place. The big difference that I am noticing is if you look at the condos, they were the hottest marketplace here prior to shelter in place, and they're now the coolest marketplace. San Mateo and Santa Clara County, they're roughly in the same ratio, but this really seems to have impacted condos more than it impacted single family homes. The only explanation I have, and it's just a guess, and I normally don't do this, I normally just report what the market's doing, but my suspicion is single family homes tend to be families, condo townhouses tend to be small families or single people or a couple, and they tend not to have as many needs to buy housing and to sell housing, and so it's more stable. Here is Santa Clara County, San Mateo County, condo townhouse. Now we're moving on to the next metric. This is inventory without offers accepted, which is where I thought I should be at. So Santa Clara County is the largest geographical area, so it has the most inventory. So it shows up here at the top. Then San Mateo County and condos are about at the same level, and you can see the trends. And then you have the other 19 market areas down here that are hard to do, but are hard to pick out. But basically, inventory was going up, it dipped down, it's ramping back up, and now you're here. And as of today's date, which is right about here, because that's the level plateau, we're basically at the normal level of inventory. Now here's the county-wide data: Santa Clara County, San Mateo County, condo townhouse. And just in case you're concerned, I'm not expecting you to understand those that quickly. I'm just flashing them on the screen so someone could go back and look at the archive and pull them up by pausing the archive. Or you can also print out the handout. Now we're looking at the number of offers, essentially the same trend. Offers were going way up, shelter in place announced, offers coming way down. We turned around right around May 1st, which is right when we could start showing occupied properties. Trend came right back up. It looks like the trend will continue because the 3-week and the 1-week trend is higher than the last data point on the 5-week. Here's county data: Santa Clara, San Mateo, condo townhouse. Moving on to number of closed transactions. Same pattern. It was ramping up, shelter in place happened, it came back down. Now there's a little bit of a lag time here, and this is the 30 days period of time to close escrows, and that's why this is lagging, but you can see it's going back up, and the number of closings is also up very promisingly. Then all the different other micro market areas. So here's the county data: Santa Clara, San Mateo, condo townhouse, and frequency of overbidding. Now this graph with all 22 micro market areas is hard to see anything, so we'll discuss it here. The trend in all 3 of them is the same, which is basically shelter in place was announced. It continued to go up because of the lag time of escrows. It came back down. People might argue this is flat right now. I would actually argue, yeah, it's probably flat, but it's going to be going back up, but it's not going to be going back up as rapidly as it should based on days of unsold inventory, and that's because buyers are being more conservative with their money currently. Here is the Santa Clara County, San Mateo, condo townhouse. Now we're looking at the magnitude of overbidding, and again, we'll do it on the county data. Same pattern as the previous, up before shelter in place, plateaued while we worked through the pipeline, then came crashing down. It's basically flat, but this is going to start going up, but not as rapidly as you would expect based on the heat in the marketplace. Santa Clara, San Mateo, condo townhouse. On to sold price. Again, here it's really pretty hard to tell. You can see that sold prices are all over the place. You can buy in some areas as low as $500,000 for the lowest 10 percentile. In other places, it's $2.5 million. We'll look at it on the county-wide basis, and you can see the trend before shelter in place was up. It continued up. It basically went flat, maybe even dipped down, and now we're coming back up again. San Mateo County was up a little bit higher. I actually think this was an overreaction based on everything I'm seeing in the marketplace, and even this might be an overreaction. This was probably not an overreaction, in all honesty, though. And the reason the number now is lower is that commuter premium, I think, has disappeared overnight. It almost seems that the bulk of the people that are buying houses are willing to bet on they don't have to commute into work as often, and therefore they're willing to go out of the local areas to get more house for their money. Here is Santa Clara County, San Mateo, condo townhouse. Moving on to median sold price, which is the only thing that most people track. And again, we'll do it on the county basis. Here, and this is sort of reverses, which is why I sort of hesitate back and forth, because I'm talking about the chart that I'm talking about at the time. San Mateo County went up, but it dipped back down. It's almost back up to the level. So the lower end of the price in San Mateo County seems to be hit, and maybe that's people trying to sneak in. The median isn't hit so much. Santa Clara County, it's basically right back up at the level here, especially the last couple data points. The condo townhouse market didn't fluctuate nearly as much, and it's probably slightly higher than it was before shelter in place. So prices are doing pretty well overall. Santa Clara County, the individual micro markets, San Mateo County, condo townhouse. Moving on to the 90 percentile, again discussing it at the county level. In San Mateo County, the most expensive homes are going for more money now after shelter in place than they were before. You could almost argue the same thing's happening in Santa Clara County, at least at the same level, if not more. And down at the lower end in the condo townhouse, basically it's been flat. And there's going to be data points like this. I've been focusing on getting the overall bulk data ready, and I will go back and clean up data points as I have time available. Santa Clara County, San Mateo County, condo townhouse. Moving on to the duration of escrow. Not a lot of valuable information here. We'll talk about it in the countywide data, but you can see before shelter in place, San Mateo County was at 25 days. Santa Clara County was at 27. Condo townhouses may have been at 28. They all slowed down. It was taking a little bit longer. People got delayed, and they went up to 30 days. I expect these numbers are going to be coming back down a little bit, and you can see San Mateo County is the first one to come back down at 29 days. You know, my personal preference is to have a slightly longer escrow. It's more easy to determine exactly when things are going to happen, but you also have to please the seller and go with the market trends. Santa Clara County, San Mateo, condo townhouse, and here is days on market for all micro markets. Again, I'll talk to about it in the countywide area. You can see that it went down to 0. This was meaning that 50% of the homes that were getting offers accepted had come on the market during shelter in place at a time when the MLS was freezing. The days on marketplace, you can see it's going up. This is normally would be a slowing of the marketplace, but this is just getting away of the impact of 0 days. I think going forward, this will start indicating whether the market's improving or not, but today from this point when you started getting data to now, it's basically working through the fact that everything that was on the market had 0, and even if it was on the market for a week, where most listing agents, most sellers want to get their house at least through a weekend, they're not going to sell the house in 0 days like the data was indicating here. So this is artificially low data back here. I could correct it, I might correct it, but I haven't gotten there yet. Santa Clara County, San Mateo County, condo townhouse. Now we look at the individual data points. This is if you want to come back and say what's going on in a particular area. This is all the data for today's date. So this is from this morning. So the last data point included would have been last night at midnight, going back 35 days. And what you can do is you can pick whatever your favorite thing is. Days of unsold inventory to me is the leading indicator. Countywide is sitting at 30 days. More impressive is South County is at 23, which is basically a record low for them. Cupertino Sunnyvale's at 21. Saratoga Las Gatos at 40. You might say, well, that's not so good, but you know, that's normally in the range of 75 to 150. So that's fantastic for Saratoga Las Gatos. The one slower area is Los Altos Palo Alto at 48 days. That's into a balanced marketplace with 40 being the cutoff. You can see the 10 percentile and 90 percentile pricing. So you guys can go through and look through whatever's important for you. Here is the San Mateo County area. Here is condo townhouses in both counties. Here is the first look at June data. So you can come over to this column here, and this is fudge data, and it's fudge because I shouldn't be looking at the data to July 6th because I need data from July 5th to go back 35 days to start on June the 1st. But you know, you're close enough. I looked at it and you compare it. Some of the noteworthy things here, I think, are days of unsold inventory at 29. If you look back, it's a hotter marketplace than any day other than 2017. And if you remember 2017, that was a very unique year where we had 2 rounds of appreciation. Not ready to say that's going to happen, but there's the potential for that to happen this year. The number of home sales per day is at 32. Again, right in line with pretty much everything since our mortgage recovery in 2010. Before that, actually 2012, we were selling more homes. We have not sold more homes since the meltdown and then the recovery. But you can look at each different area. So now this is all based on monthly data. And again, as I said, this isn't actual data, it's tentative data. It's not going to be off by very much. But again, you can see the 10 percentile, the 50 percentile, and the 90 percentile for Santa Clara County single family over the past month, sort of, basically June 1st, last night, midnight on July 3rd. So it's only 33 data points instead of my required 35. Here is the same data, but on normal graph. The last one, the previous slide was on semi-log. This is on normal analog, which is what most people are used to. Again, you can see 10 percentile. The light line down here is the previous peak back here in 2007, to put it in perspective. And then the median is the medium green, and the dark green is the 90 percentile. So you can see when people came back up, the lowest price took the longest to cross over, the median was the next, and the high-end price was the first to recover on from a price point of view. This is just the last 10 years. That was 20 years on the previous graph, so you can sort of see, and you can see the trend is up. Now, again, you've got to remember, to get sale price, you got to close escrows. To close escrow, I'm looking at lagging indicators. So this isn't showing the real robust marketplace that has kicked in since basically May 1st, because it takes a while to have that reflect in 5 weeks worth of data, then 30 days. So it's basically just now reflecting, because that's 65 days. 65 days from May 1st is basically today, July the 1st. So I expect these prices to go up. I don't expect them to go up as rapidly as they would, again, because buyers right now are a little bit hesitant to overbid dramatically. Here is looking at the frequency and magnitude of overbidding. You can see that the frequency came shooting right down. You can see the last data point is up a little bit. So this is basically the impact of shelter in place. Here's the impact on magnitude. You were up here somewhere around 106%. You're now down around 100.6%. So a fairly significant drop. But again, that's the lagging indicator. I would expect it to start going up based on days of unsold inventory and everything that's going on in the marketplace. Here's the 10-year, so it's easier to see. I should have advanced, sorry. Here is something that I don't think is that meaningful. It was my first stab at the overbid underbid ratio, but this was simply a ratio. I may go back to raw. I may integrate raw count, because that takes into consideration busy months and slow months. But there's 10 years worth of data point, and again, you can see the last month it turned around. So again, this is closings that happened during the month of June, which would have been offers during the month of May, right as the market was coming back. Now we're getting into leading indicators. We're looking at days of unsold inventory. So you don't have to wait for escrows to close. And that's the purple line, or the blue line. So you can see it slowed way down, and now you can see it's come way up. And you're strongly in a seller's marketplace here. You can see days of unsold days on marketplace went way down, in part because the MLS froze it. You came up. I think you're going to go up one more month, and then you'll plateau. You'll probably plateau at some of these fairly low numbers. There's the 10-year data point, 12-month moving average, or 1-year moving average. So I'm looking at, we'll do the blue line first. That's the inventory at the end of the 35-day period. And so then I go back 12 months and do the average. So you can see we were going up, we were coming back down, and as inventory goes down, that tends to cause supply to go, demand, the ratio to go up. The other key probably is demand. You can see it went down with shelter in place, but as level, it's probably going to go back up again. If you look at DUI, the purple, that is raw data. So you can see how it was coming up in 2019. It's fluctuated, then it went down, and now you're up here. And basically, and this is over on this scale, going back and looking what it was June 1st, May 1st, April 1st, and then taking a 12-month average. And so you have the end of the year. So what you're looking for is changes. So right now, it's not really changing compared to what it typically does at this time of the year. Here it is on a 10-year graph. And then this is looking at the 10 percentile price ratio to the median, and the median ratio to itself, which is always the horizontal line, and the 90 percentile ratio to itself. And so what you do is you can see right about this time frame, 2007, there was some price compression, then followed by some price expansion where the distance got greater, and now we're getting into a little bit more price compression going on. This data is May, so I won't go over into it because I didn't have time to get June's data up. This is the micro overbidding distribution graph. And then this is back to the raw data that we saw at the beginning. And so that's everything. And we got...
Hi, Richard.
Hi, Lily. Go ahead.
This is Lily. Okay, I just wanted to see the chart number, page 26.
Okay. There.
Okay, oh, the question is that I think you explained it pretty well, but then probably be better to add a title in each of the column. So it's more easy to, you know,
very good point. I almost did that by hand. You can see the black line separating.
Yeah, I see that. Yeah.
So I will put in days of unsold inventory, frequency,
right.
overbidding.
Yeah, magnitude and.
Yep. Happy
okay.
with that.
All right. Yeah, that's it. Thank you.
Anyone else have a question or comment? Again, host a meeting next week. Thanks for joining. Have a nice day. Enjoy the 4th of July.
Thank you.
You're welcome.